Let's take a look now at how the currencies are trading before we come back to the market. Well, joining me now for a look at how the markets are faring is Ian Cruickshanks. He is an independent financial analyst. Ian, before we talk about our market, everyone's talking about Cyprus. Just your take on that. We've heard about this explosion of anger in Europe, but also contradictory views on it.
Yes, most certainly. And perhaps the knee-jerk reaction was a jerk too far, because what we're seeing, as you were mentioning just now, is how the markets opened really with a smackdown, but have been recovering a bit since subsequently. We've seen it in the Rand exchange rate, always a very good indicator. That's a little stronger. Yeah. That's very interesting. That just means that there's still a funds flow into emerging markets, into South Africa, and I think that just says perhaps the initial move was too much, and I would look at it this way and say at least there is some certainty. Yes, it's darn annoying. We're not going to get all of our money back. The big depositors are going to have to forfeit 15%. But it's better to get 85% to be sure of getting it back than to be uncertain of whether that deposit was going into a bottomless hole and there would be none coming back. And I think that the markets maybe are sitting back and saying, well, there's certainty now, not comfortable, but at least we know where we are.
Perhaps if they'd done that with the Royal Bank of Scotland, for example, or Northern Rock, those institutions would still be going, or would not have had to have the rescues that were imposed on them.
Well, that's a possibility. Does this mean that Cyprus can go into the capital markets on their own? I would doubt that at the moment, because that's a terrific amount to have to say, well, you know, we're coming at that sort of discount.
But it sounds like they didn't sell it very well or explain it very well, because there is the possibility of runs on banks.
It's a possibility, but I think that the major central banks will be watching that very carefully indeed, and they will be prepared, I'm sure, to pump liquidity in. Just look at what the EU said. The ECB, I beg your pardon, will provide as much liquidity as is required. Repeat, as much as is required, and that's exactly what Chairman Bernanke at the Fed has been doing as well.
In fact, ever since Draghi said that, was it September, October last year, that has been used as the backup statement. Let's talk about our market. As I said earlier, it was down this afternoon, but not by as far as it was earlier in the day, so it came back a bit. And then, first of all, that market, then we look at the companies.
Well, I think if we have to say the market as a whole, you know, it was a risk-off scenario right away. Hey, let's get out of risk. Like it or not, South Africa is an emerging market. We're in a high-risk area, and in addition to that, because of the size and depth of our financial markets, very often that a position which can't be moved in, say, the Argentinian peso or wherever it is, they say, we can't get out of that. Never mind, short the Rand. So we take the knock. And it reverberates through all of our financial markets to an extent. And I think that they say, oh, well, it's not as bad as we thought it may have been. It will pull back just a little bit. So I think the next few days are going to be crucial, but I don't think it's a mortal blow.
Right. Let's look at some of the companies, and we've just had Eugene Benneker from Iliad there. A company that you follow?
Yes, very much so. And I think a line that you asked about was the Bucky Builders. A very good about baseline indicator of what's going on in consumer spending. Is there confidence or not? And that confidence has been declining. I thought it was very interesting that when you said to Eugene, would you see a 6.5% increase in profits again?
Well, revenue, I said.
Revenue, I beg your pardon. And he gave the impression, I understood it to say, that to be that if he got that again, he'd be quite pleased.
Yes, he did.
Now, you know, I think that's very important, isn't it? Because that's satisfactory. It's only just inflation positive, but that's all.
But he's saying he's going to battle to repeat this performance in effect, isn't he?
You see. Now, what does that tell you about consumers being stretched, high debt levels, and uncertainty? You know, the whole cost of living. It's Eskom, electricity, fuel, food, they all go up and they never come down.
Also get a sense with these companies that are reporting now that they are, and Advotech is another one that did this, their revenue up just 5%. Now they have a good model, they take advantage of education conditions in the country, privatisation, not perhaps as advantageously placed as Curro, which is at the lower end of the market.
Yes.
So under pressure when consumers don't have money, headline earnings were down 14%.
That's a surprise.
They still paid a dividend at 24 cents. Iliad's got a dividend of whatever the dividend was, I forget, but they paid a dividend.
Yes.
But obviously trying to make sure that there's still a dividend to keep the faith of investors, but maybe that's not going to go on.
And so that if they need new capital, they can still go to the investor and say, we're still paying our dividends, and that's a very important factor to be able to make. But I'm always concerned when I see profits come down and the dividend isn't changed. Yeah. Well, either it's the directors taking too much out, or perhaps it's just trying to make an impression which isn't entirely justifiable. If that trend continues, the market's in trouble.
Well, remember when Anglo-American passed their dividend completely.
And it was the right thing to do. Sorry to
interrupt. It was, but the effect of it was enormous. Now, I think it haunts all companies that have been good dividend payers over the years. They'll do anything not to stop paying that dividend. Yes. So just let's talk about Advotech quickly. They describe tough conditions. As I said to Eugene, everyone's talking about tough conditions at the moment, but this must be a bit of a setback for them given their previous growth.
It is a bit of a surprise, and it may just be that they're not able to pass on the cost of education to the parents of the students themselves. And I think that also is all part of the strain that there is on consumers, even at the upper end of the economic spectrum. It's still a strain, and I think we've seen it from other consumer-oriented organizations where they have said they have seen sign of strains. Even in the banking sector, Mike Brown from Nedbank said we've seen signs of strain in our retail banking sector.
Also, we heard with the credit numbers, consumer credit numbers, a lot of consumers are living off credit to keep their running costs going and hoping that somehow or later they'll recover it. Some people pay their education fees on credit, so that's not sustainable. No. Metair, another word, the word tough comes up, but they've done quite well. Headline earnings up 19%.
Absolutely. And David, I went along to their presentation to analysts this morning, and I was impressed. I really said, wow, I should have been paying more attention to this company, previously. It's got a very good record, really innovative, conservative though. They don't overstretch themselves, they don't overstretch their cash facilities. And they've still got cash in the bank at the end of the year.
It's literally nuts and bolts, motor vehicle parts, industrial products,
it's more
hard
than
stuff.
More than that though. It's also exporting, it's not just the local market, and they've now got a company in Europe, in emerging market Europe, and they're starting the business there on a similar model to what they've done here, and it's in the automotive parts business, and they've also designed and built their own electric cars. We saw 2 specimens of them.
Okay.
That's interesting.